Welcome. My name is Fabian Ding. I'm the founder and chief investment officer of FMD Wealth Advisors. So this is the fourth episode of my podcast, Financial Friction. And our topic today is navigating divorce, financial steps to reduce stress. Divorce can feel overwhelming, emotionally and financially. While time helps, there are practical actions you can take early to reduce uncertainty and protect your long-term stability. Here are concrete steps to consider once you know divorce is moving forward. Don't go through it solo. Divorce decisions often happen during a period of high stress. That's exactly when it becomes harder to separate emotions from strategy. Getting professional support isn't about winning or being difficult. It's about treating the financial side of divorce like a major life decision with long-term consequences for you and often for your children. Consider a CDFA, Certified Divorce Financial Analyst. A CDFA is trained specifically to evaluate the financial outcomes of divorce decisions. They help you understand trade-offs across topics like taxes, retirement accounts, property divisions, and the long-term impact of child and spousal support. A CDFA can support you whether you work through attorneys, mediation, or a more collaborative process. If you want divorce-focused planning support, FMD Wealth Advisors can help you model settlement options and organize the financial decisions that follow. Another important thing is that you should speak with a divorce attorney early. Legal guidance matters, especially around protecting assets, establishing temporary agreements, and making sure documents and deadlines are handled correctly. To find the right attorney, ask for referrals from people you trust, friends, a CPA, an state attorney, or financial professional. It's often worth interviewing more than one. Your goal is to find someone you're comfortable working with and who communicates clearly. The highest price option isn't always the best fit. Another important point is that credit still matters. If your name is on a debt, whether it's a credit card, loan, or line of credit, missed payments can affect you, even during divorce. In many cases, obligations that either spouse participates in can still impact both parties until they are formally separated and refinanced, transferred, or paid on. Keep payments current while you and your attorney determine the best path forward. Another point that's very important to mention is to deal with joint accounts carefully. Joint accounts are sensitive because either person may have access. Ask your attorney whether it makes sense to restrict activity on joint accounts. This is difficult emotionally, but it may be necessary to prevent unintended withdrawals to create structure while the divorce process unfolds. In some situations, a bank can require withdrawals to be approved by both parties. That allows each person access to agreed upon funds while reducing the risk of unilateral actions. Even if you believe your spouse would never drain in a joint account, it may still be wise to plan conservatively. If one spouse does take more than their share, attorneys often address that later through adjustments during the division process. You may also be advised to open an individual account for your portion of funds and to receive future income. Another point to keep in mind is to build a clear budget. If you don't have a detailed picture of your household spending, now it's the time. A budget helps you understand what it truly costs to run your life. Housing, childcare, insurance, groceries, subscriptions, debt payments, and everything else. This becomes especially important when determining whether child support or spousal support may be needed and what amount is realistic. Try to keep spending steady and avoid revenge spending. It rarely helps and can complicate negotiations. Another important point is that you create a financial roadmap. It changes the plan, but it doesn't eliminate your goals. You still need a roadmap for retirement, savings, and your next chapter. A written plan can help you evaluate trade-offs and stay on track year after year. A financial plan can also bring stability during a period when everything feels uncertain. Knowing where you stand and what steps come next can reduce anxiety and help you make decisions. Let's focus on some key financial issues people often miss. Here are areas that frequently create problems during negotiations or after the divorce is finalized. Asking to keep the home when you can't afford the ongoing costs. Confusing taxable versus non-taxable assets when dividing property. Understanding what a quattro, qualified domestic relations order, does and when it's required. Protecting spousal and child support using life insurance when appropriate. Making isolated decisions instead of looking at how each decision affects everything else. Assuming a 50-50 split automatically equals a fair outcome. Overlooking the income tax cost basis of property. Not having a clear plan for how debt will be divided and managed. So in summary, there are many points you should focus on, but at the end, don't rush. Some estimates put the average timeline for a divorce at approximately 1 year. People often get impatient and accept compromises they later regret. Also, keep in mind that less than 10% of divorces go to trial. One thing you should expect, regardless, is a lot of documentation. You may need to provide paperwork, and more paperwork. Many divorces require a detailed financial affidavit listing assets, liabilities, income, and spending. Some questions can feel extremely detailed, but the process is designed to create a complete financial picture. It can be complex, but it's often necessary. So let's focus on the months after divorce. Call it resetting your financial life. Even once the documents are signed, the financial work isn't automatically over. The period after divorce is a transition, and it's a good time to rebuild structure, confidence, and clarity. So keep calm and move forward. Divorce can change your standard of living, sometimes dramatically. So for example, how would you handle a potential 35% decrease in lifestyle? In that situation, the goal isn't to panic, it's to plan. The sooner you understand the new reality, and the sooner you can stabilize and make intentional choices. So what's important in that situation is that you know your spending and your net worth. So a financial plan can help you quickly understand how much you owe versus how much you own, how much you spend versus how much you save, whether your current lifestyle is sustainable, what adjustments will have the biggest impact to your cash flow situation. So a financial plan, can also help answer common questions like, when should I take Social Security? When can I afford to retire? Can I travel the way I want later? Am I spending too much? So if you already have a financial advisor, start by checking in with them. If you're looking for a divorce focus planning support, or in general for a financial advisor, FND Wealth Advisors can help you build a post-divorce roadmap and reduce uncertainty as you move forward. One of the final things to mention is that you should build the right team. So many people rethink their financial relationships after a major life event. Some research suggests approximately 70% of women replace their financial advisor after death or divorce. That doesn't mean you must change, but it does mean you should evaluate whether your current team truly supports your best interest. At a minimum, consider a team that can cover complicated tax situations. So make sure you work with a CPA or an EA, enrolled agent. An estate attorney should be part of your team, a financial planner, a financial advisor. Make sure you interview them and you ask them direct questions. What is your investment philosophy? How do you protect clients? What are your fees? Is planning included? How often will we meet? So the right support can make this chapter feel less intimidating and a lot more manageable. So in conclusion, as hard as it feels now, divorce can also become a turning point. Over time, you will have a clearer picture of your finances and more control over your future. Stay focused, take care of your health, and keep moving forward. There is a point when things start to feel lighter again. We, here at FMD Wealth Advisors, are here to help you. Feel free to reach out. My name is Fabian Degen. I am the founder and Chief Investment Officer of FMD Wealth Advisors.